Good morning, ladies and gentlemen. So in this video I will be showcasing my algorithm, how it works, how it interacts, and how to find Confluence using it. So this indicator, it's 3 different super trends combined into one. So first of all, what the super trend actually does, it calculates and measures the volatility. And what volatility means is more or less how much the price is moving. And this can be in both directions. So this works both to get buy signals and also to get sell signals. And the reason for me combining 3 different indicators into one is to create this algorithm, which will give us Confluence. I like to use it with the volume. Mostly, the volume is one of the most important things to actually look at. So for instance, let's start out on Kodak. Right now I'm viewing the 5-minute chart, and that is mainly to make it look more visually pleasing. But on a regular basis I use this on the 1-minute time frame. And some of the topics I will go over, as I mentioned, is Confluence. And I will also tell you what indicators that will work the best with this algorithm. So my favorite is the Alligator. Then we have the moving averages. We also have the stochastic momentum index. So this is the stochastic momentum index right here. I will also give you the videos to both the Alligator and the stochastic momentum index. They are, quite frankly, quite easy to learn. They're not as complicated as they might look when initially just seeing them. But let's look through a different tickers, and we'll start out by only using the algorithm itself, alright? So let's look what actually happened in this area right here. You can see, here comes the first buy signal. And I like to call these the aggressive entries, because this is the subtrend with the setting that is the most aggressive, quite frankly. So here you can see the first buy signal. It comes in on the candle about $8, right? And then also, if we look very close right here, in this little area right here, you can see how all the 3 different green lines actually cross over each other. So what that is telling us, it's confirming that this entry is a good one. Because right here on the buy signal, we only have one single green line, as you can see. One single green line. But here we get triple green lines, which means they're all aligning and confirming the entry. So that way we get Confluence by having 3 different settings. Excuse me. And as you can see, the triple green lines go all the way up here, right? And here we get the aggressive sell signal. So you see, there's only one red line right here. And immediately after the red line, we do actually get a buy signal once again. So what that tells me, sure, if I want to exit right here, it could be good. But remember, there's only one red line. So I would not actually exit right here. Because as you can see, instantly after a sell signal, we do get our buy once again. So once again, this is the aggressive buy. And right here, once again, we can see how all the lines once again come together and cross over each other. So what that is telling us, once again, we have Confluence. The volatility is here. The average to range, the highs and lows are looking very solid. So once again, let's see what actually happened. But let's say we did not enter the ticker before here. So I would even be entering the ticker pretty slow, pretty late. That would be pretty late of an entry, considering we got a first signal right here. Let's see what actually happened if we took the entry right here. I'll also show you where we would have our stop loss in this scenario. So we take the long position, we enter. So if I enter right here on the yellow line, which is about 13.5, I would place my stop loss pretty damn tight, because I don't want to risk it in case the price drops. So in this scenario, I'll be placing it at 11.5. So let's say we took this trade perfectly with the algorithm. We would have produced a risk to reward, which is 1 to 24. That is a huge play, and obviously Kodak is a specific example. And this is not all the... You will not only find these entries, but also something to clarify regarding this ticker. Excuse me once again, regarding this algorithm. As I was saying, it actually tracks and calculates the volatility. So with that said, that means it works the best on low cap stocks and high volume. I can even showcase you real quick in the Discord server I run. So if we go to the bot feed right here, we can do stat, exclamation mark stat. For instance, let's do Rumble, because that's the chart we have open. I can see that the float is 1.9 million. So every single float beneath 10 million, I would consider a micro float, which means it's a very small float. And that tells us that the price will move up and down pretty quickly, depending on how much volume there is. And in other words, it won't need a lot of volume to move, right? So let's look before the spike, because I actually played this ticker. I entered at around $22, I think, around here. And you can see what happens. Also, let's only look at the buy signals for a second so we can get another clear understanding. So for instance, I can see right here, you see in the middle of the candle actually, you can see in the middle of the first green big candle, there is a buy signal. So this, once again, here would be the aggressive entry, right here. But also if we look closer and zoom in, we can see that all the lines actually cross over each other slightly thereafter. So that confirms that this is a good entry. But also, once again, we can look at the sell signal, because this will also produce some false signals, but you need to combine it, number one, with your volume, with your intuition, and where you're happy. For instance, if you take an entry, don't feel obliged or that it's mandatory to wait for the sell signal. You can exit whenever you want, but this algorithm will produce a lot of good entries. So for instance, on this microfloat, Rumble, I would ignore this sell signal right here, because as we're speaking about, this is only one single sell signal. But here, for instance, we do actually get triple sell signal. Because if we look closer, the first sell signal, here we also see that all the red lines actually come together. But shortly thereafter, it actually goes green again. But for instance, if we did sell right here, so about 18, it then goes to 16, we could then sell here, then buy once again, and follow the trend. But let's see what actually happens. So let's say we did not enter the ticker whatsoever about here. Let's say we only enter the ticker on this buy signal right here. This one. Because once again, this is the aggressive entry. But I can also see all the way back here that I already have two lines confirming that it's a good entry. So I take the entry right here. Let's say I enter the market right here. I would place my stop loss at the bottom right here, in between these two green lines, because in that case I will not hold a lot of risk, and I am able to ride the position without having to stress or become emotional. So let's look once again at what risk to reward this actually produces. So let's also look, because this is going to be only in the matter of a few hours. So right, once again we get a risk to reward 1 to 24, which is massive, right? So let's say we took that entry and we sold right here. Actually, let's not think of it like that, because once again we can see these are the aggressive sell signals with only one red line. Let's say we held all the way up until here, because here is where we actually get the triple confirmation to exit the ticker, right? If we look closer on the lines right here, they all come together and cross over each other, right? And what happens shortly thereafter? So the price was at about $28. It went all the way down to 18. So that is almost a $10 per share, which is more than 30% in this scenario. And here is also a good example of what a short-term play could look like on this ticker. Because if we look right here once again, the aggressive buy signal, in this area right here, we see that all the lines actually align. So once again, let's say we played it only off the signals right here. So we enter right here. I will place my stop loss right on the bottom wick of this candle right here, the red candle. So let's say we only played on the sell signals. So we enter here and we exit right here. So if we did exactly that, just the signals themselves, we get a risk to reward 4.5, which means even if we took 7 out of 10 trades that have the exact same setup, and we lose 8 out of those trades, we would still profit. So let's see a few more good entries and exits, for instance. So here is another perfect example. Right here, the first aggressive buy signal once again comes in. I might be feeling a bit hesitant because I saw the price drop before. So I decide to wait. I want the actual confirmation that I want to enter this. And also something to take a look at is the volume when this is happening, right? So once again, aggressive buy signal, and right here we see how all the lines once again align. And when that happens, you can also see how the bars turn green. So let's say we entered pretty late on this one. Let's say we entered right here. We put our stop loss beneath the candle, so we're safe. And let's see what kind of risk to reward we got. And I'll also just do this as if we were playing off the signals. Aggressive, here is the Confluence with the triple confirmation, and here is the sell signal. So ideally I would want to exit right here on the peak, but the execution is not always on point. But what's important is the risk to reward and the profit in itself. So let's say we played until, it's actually because, as you can see once again, the aggressive exit signal is right here beneath the candle. Let me see if I can get it out. Okay, anyhow, you can see that the sell signal is right here, the first aggressive one once again. So if we look where the lines actually cross over each other, it's right here. Because one red line, 2 and 3. So that's telling us you should probably exit the position right here. So if we only played it off the Confluence with the triple confirmation on both buying and selling, in this scenario we would get a risk to reward which was 3.8. So once again, even if you made several of these trades and lost the majority of them, you would still make a profit. So here, as you can see, once the sell signal is issued, what happens? The price goes all the way from, technically from $38 all the way back down to 21. So you really would not want to hold in this area because you would actually lose majority of your profit, or even if you entered late, you would lose a lot of money. For instance, if you entered anywhere in this area right here and then did not sell or do anything. So here we can see once again how powerful this algorithm is, especially when having 3 of them, which allows us to get Confluence. And here you can see also on the shorter time frame, because this is a very short play. So this is 17 and this is 13, so it's 4 hours, okay? The first aggressive buy signal. Right here we see the triple confirmation of the lines. We also do get some sell signals right here. But for instance, these can actually be ignored. You don't need to follow the algorithm 100%. You want to find other factors to use the algorithm as a tool. Let's say we took this entry and we sold off this sell signal right here. Because here it once again gets the confirmation that it's a good sell. So we get the entry, which was on this candle right here. And we play it all the way to here. We would still get a very good risk reward. Actually, let's adjust. I would not have my stop loss like that most likely. But right here, once again, we would get a very good risk reward by just following the signals themselves. But something I want you to really take into consideration, because when you do see the price spike, so let's say this is an area where the price spikes. Let me move this. This is also an area where the price spikes. Here's another one. So if you just look at the volume itself in these areas right here, and if you also look at the volume prior and previous to the price spiking, you can see that it more or less does not exist if you compare it to this area right here. So using the volume at the same time you're using the algorithm will be super powerful, and it really is not difficult whatsoever. But let's up the ante a little bit, and I'll show a few different tickers, but we'll also throw in a few additional indicators. So for instance, we'll start out by the moving average. You can see I've done a lot of drawing on this chart because I usually do my own TA, and this is done on a 1 minute time frame. In reality, I'll remove the drawings. There we go. You can also see these huge candles, right? But we start out by throwing in the moving average. So this is a 9-day moving average. I like to have the blue color. Also have a pretty fat line on it to make it more clear what it is. So the moving average is essentially telling us the average of the move. And something to really take into consideration when using the moving average. For instance, in this area, in this zone right here, in between here, you can see that the price is moving above the moving average. And usually when the price is moving above the moving average, it means that the ticker or share or stock is in a strong uptrend, or even a small uptrend. So let's also look what happens when the price moves beneath. Because right here, you can see that the moving average is now moving above the price right here. What happens? We instantly see a downtrend. So we could draw it something like this, really. So it would be more or less from right here, from $6 all the way down to 5.6. Actually, excuse me, this is from $7 all the way down to 5.6. So right here you could get your exit signal by just using the moving average. So you would not, but you also get confirmation here to sell by the algorithm itself, and also in this area you can see how they all align once again, giving us the triple confirmation and confluence that this ticker is most likely going to start a downtrend or drop in price. So ideally we would want to exit in this area right here, somewhere in between here, because otherwise we will see a drop all the way down to 5.5. We can also see what happens. The price keeps moving down, and as you can see, all the red lines are still showing and appearing very clearly, which is telling us it's still in a downtrend. And here is a perfect example of a bad or false input, because here we get aggressive. Remember, this is the aggressive buy signal. It's telling us that the volatility is actually available, and it is available, and it is going on. But here we get no triple confirmation, and at the same time we can see that we still have these red lines and downtrend is active. So this is a perfect example where you would like to ignore the buy signal. Do not take every single aggressive buy signal. But as I showed earlier, what a good buy signal would look like, for instance, right here, we get the first aggressive buy signal under this candle, and then also in this area we get triple confirmation on the lines. What happens? It goes all the way from 5.6 up to $8. So right here you would want to enter, and here is also another false sell signal, but because we don't have the triple lines on the sell signal, we can just keep holding, right? But right here in this area is where we would want to sell. So that is by you can use the moving average, you can use the volume, and also you have the triple lines with the algorithm. So now I will be looking at a different ticker. This ticker is actually from today's date, which is August 3rd. So now let's add even one more indicator to this algorithm, alright? And this might not be... I'll actually go on the 1 minute time frame on this ticker to show you guys, and I will be using one more indicator. It might be a lot of lines and might be sort of hard to interpret or know what's going on. But as I said, with purchasing this algorithm, you will also be getting extensive guides on the indicators, which I like to use. Which one of them is the stochastic momentum index. It might look pretty random and complicated, but in reality, it's not. But also the moving average. I suppose most people watching this recording will be aware of what it is. But once again, I will show you my settings on the moving average. Simple, regular moving average, 9-day, okay? But now for the additional indicator right here. So this is the Williams Alligator. And the Williams Alligator is more or less a bunch of moving averages, but it's using a different mathematical equation. So we're showing you the colors I'm using and also the inputs. So these are the inputs, 8, 5 and 3. These are the only 3 inputs I've changed, 8, 5 and 3. And these are the colors I'm using personally. You can adjust them as you wish yourself, but it works really well for me, and also it represents the Swedish flag, which is blue and yellow. But anyway, let's look what happened at the beginning of this uptrend. Here we get the first aggressive buy signal, once again on this candle right here. But also if you look very closely in between these candles, let's zoom in a little bit, right here on top of my cursor, or beneath to be more clear, you can see that the triple lines are actually aligning. And once again, what does this tell us? That the price has been confirmed, the volatility is in place, and we have our confirmation that it's a good entry. And here, once again, we get a aggressive sell signal. But as you can see on this sell signal, once again, it's only one single line, so you do not need to worry. Also keep in mind, as I was just referring to on the moving average, the price is moving above the moving average, which, remember, is indicating to us that it is in an uptrend. And essentially the same thing can be used with the Williams Alligator. So when the price is moving above these lines, you will often see it in a uptrend. So let's say we took this entry right here, right there, on this candle, which is a bit later even, because here is where we get the triple confirmation. We can also use the volume, which starts spiking about here. And once again, all these lines, the moving average and the Williams Alligator. So let's say we take this entry. So we place our stop loss, something like this, beneath the candles. So as you can see, we only got one false sell signal. So we could hold it all the way up here, for instance. So this would be a risk to reward that produces 1 to 8. So you have the risk of 1 and you have the reward of 8. But also, I'm going to go over on this ticker specifically how you know when to exit. Because I'm going to mark it out right now. Right here in this area, we don't only get 1, 2, but 3 reasons to exit. So in this area, I can't actually zoom in more. Also take in mind, this is on the 1 minute time frame. So this is more accurate and actual in real time. But once again, I was speaking about the moving average, which is the 9-day length. Right here, you see that the price starts to move below the moving average. The moving average is the blue line you see on the chart. And right here, you see that the price starts to move beneath the blue line. And also, here's the first aggressive sell signal. I'll mark it out. You can see that the red line comes in right there. Here we get a second red line. And also you can see that here in between the candles is the third red line. So we get confirmation by the moving average. We get confirmation by the indicator. And we also get confirmation by Williams Alligator. Because remember, the white, the yellow and the purple is the alligator. And also here we can see that they all start curving down. So when these indicators start to curve down, it's indicating to us that the momentum is shifting. And also if we just take a look at the volume, because right here we see a lot of buying up until here, and here's only red, red and red volume. So that way we would not only get one reason, but we get several. So remember, first reason in this scenario is algo, which is the algorithm. It confirms right here. The second reason would be the moving average, which we see right about here when it starts to curve and the price starts moving beneath. And also we get our third, the alligator. So all these 3 different factors are telling us to exit in this area right here. I'm going to mark it out to be more clear. So you would want to exit in this area. If you're exiting all the way down here, you've already lost out on a lot of potential profit. So you want to actually listen to what the indicators alligator is telling you. But in this scenario, we even get a 4th reason right here. Right here. And also, if you just take a quick look at the stochastic momentum index, which is at the bottom of my screen right here, you see a yellow and a blue line. And here you can see that the blue line actually crosses over the yellow one. So on my cursor right here, you see that the blue line starts moving beneath the yellow one. So what that is telling us is that the price is about to reverse and we're about to see a downtrend. So the powerful thing about using this strategy, these indicators and this algorithm, you can play both sides of the table. That means you don't have to only go long and buy shares in the positive and traditional fashion. We can also use it to short stocks. So let's say from here and to here, we had a 1 to 8 risk to reward, if I recall correctly. But right here in this area, because we get our 4 reasons to sell the stock, we could also short the stock, alright? So let's see what type of risk to reward we will get by shorting it. Because as you can see, right after we got the exit confirmation, the price dropped more than 50%. So you can also make money from the price going up, but also a lot of money from the price going down. So it works in both directions. So I'll show you with a short position instead of a buy position. So let's say we entered right there. We would put let's put our stop loss right there. Our entry is right there. And I'll draw this down to the current price. So right here, if you shorted the stock on the reversal, which you could also see on regular candles, but that is something else I will be going through at a different time. You can see you would have made 56% from shorting the stock. So you could first ride it up, and after the ride and uptrend is over, you just go in the other direction. So instead of being a bull, you become a bear. And being a bear is incredibly underrated. So I use this algorithm both to scalp, day trade, but also to go short on stocks, which means I'm betting I'm betting that the price is going to drop. And as you can see very clearly, after the we got 4 factors telling us to exit right here. After those factors all told us to exit, the price dropped more than 50%. So if any of you have more additional questions regarding the algorithm, the indicators, or my strategies, don't hesitate to send me a direct message. I will also include a few videos to specifically go over more in details how the Alligator and how the stochastic momentum index works. Because I don't only use one factor. I want as many reasons as possible to enter or exit the market. Because that way I will not be trading with my emotions. I can just absorb all the information and then make the correct purchasing decision. And in average I have a 87% win rate using this strategy. If you guys feel lost or confused, don't hesitate to ask me or to get more clarifications. I will happily do it. But please take into consideration, as I said at the beginning, this strategy works the best when there's a lot of volatility. And where you find volatility on a regular basis is penny stocks, low cap, micro cap, and high volume. So that is what I like to trade. Some people might not like it because some people think it's very risky. But there are strategies, as the one I just showed you, how to profit on a consistent and regular and daily basis doing this. So on that note, I will be ending the recording right here. I hope you all have a beautiful day, and I'll catch you soon. And as I said, don't hesitate to ask me any specific or more detailed questions. And meanwhile, stay green, alright? Peace.